Okay, guys, let's go on with the continuous discussion of everything. Now I'm just chill over here. I don't have much planned for today, but I do want to cover a few things, a few good points, bad points, or whatever. But it's Sunday, you know. I have the whole week off. Uh, Coming week, so I don't know if I want to live stream the whole week during the market open. It would be fun to do, but of course, it's just gonna be me chilling, looking at charts. But we'll see. I don't know how I feel about the whole thing. But yeah, I'll be off the whole week. Yeah, we'll see. All right, so let's pop in the chat here. Okay, so give me 1 second here. Okay, nobody's here yet. It's okay. It's live. Okay, so I'm sure you guys will pop in a minute, but feel free to chat on there. You'll be seeing them. Okay. So of course, like people have been not now. Who is that? Francis? I have no idea what that is. All right, guys. So of course, I've seen a lot of discussion about Rowan Kitty and all that stuff, and of course, hey, I'm in the play. I'm here. All right, Stefan, welcome. I'm sure you're new to my channel. I appreciate you. Thank you for joining. Where are you coming from, if you don't mind me asking? Are you a friend, foe? Are you in Gamestop? Are you in what is your direction here? Tuning into the whole craze over here. All right, so I lost my train of thoughts here. So I wanted to go through a few things. Of course, the whole saga is still on, and I'm just here chilling, thinking about what's the week to come might be, and I think it's gonna be a good week for everybody in GameStop. Obviously, before I go any further, of course, I'm biased in this particular stock. I own shares. I own call options currently. I might write covered call as well, and so who knows. But I reserved my rights to kind of take advantage of the market in that sense. So I have my strategy. Full transparency here. I mean, not full, of course. I'm not gonna tell my exact position here, but I do own shares, and I'm here for the long term. Of course, I believe in the company. And also, too, I do understand the OPEC cycle and all that stuff might present an opportunity for people who are, trading on the volatility aspect of things. So, yeah, and I'm here for all of that. Holding since 21. Oh, great. Thank you for sharing that. I appreciate you. You expect Form 4S to be announced tomorrow until I have no idea. It would be speculating on all of that. I hate speculating on the forms and all that stuff, and that's why I usually wait until the filing is already done to make any price target or any things that I usually do. But again, of course, I've been here kind of along the same time as Stefan over here, 21. My cost average is a lot lower now because I've been dollar cost averaging. But I first start my position around this time right here because I was expecting a breakout, right? But of course, I'm only like small amount at a time here, and I've been dollar cost averaging down ever since, even over here. Of course, this is my second, kind of like loaded up on this particular, time frame over here. So yeah, just my background here a little bit. But no, I have no idea, honestly, about Form 4. If there is, great. If there isn't, remain to be seen. But the expected week ahead, it's just so juicy in a sense that, hey, option chain and all that stuff. I'm kind of learn as I go too. I'm not an expert on anything, so please don't. Do not take financial advice or anything like that. I'm not telling you to buy whole or sell. It's up to you. Whatever side you're on, you're welcome to do those things. As far as my own portfolio concerned, I have a strategy. My strategy is, of course, to have a portion that I will be holding it forever until, all of these are being met, right? And of course, like if the price is like juicy as like $1,000, $2,000, $3,000, of course I'm gonna consider trimming some of this position. But I will never kind of sell my shares completely out of this particular company. I will, hold a portion of it. And then as far as the strategy for the run up, I'm planning to kind of like trim off some of my position. And I have another bag where, I reserve the right to kind of take part in the price action here. And I would do, a small position at a time here, 10 shares at a time, 2 shares at a time. But of course, this might change as well based on the, ebbs and flow of the market. Currently, I have a $100 price target for 1 share of my, if any short seller who wants a 1 share and need to cover at $100, you know where to come from. You know where to come. Now, of course, okay, I'm kind of playing around, but this is actually my strategy here. And my other account I use to kind of like take advantage of the call options and all that stuff too. So, but those are very small in comparison, right? I do a lot of strategy where, the same strategy that people would use to, accumulate shares of other stock as well, like the wheel strategy, for example, poor man covered call, for example. And I do all those things because my own personal learning here, right? And of course, like taking advantage of the volatility. Sometime I win, sometime I lose. Of course, that's the nature of the gambling aspect of it, right? But I only reserve those account to be very low and risk manage as I go. But as far as like the long-term aspect of things, hold on 1 second. Long-term aspect, I am. Hold on, let me tell. Give me 1 second. Goodness gracious. Okay, sorry about that. Hey Jay, what's up? Haven't seen you here in a while. How's everybody doing? Hi Michael, howdy. Nothing much. I'm just chilling, chill zone over here, as I said in the live. But anyway, I was just going through all my strategy again, just in case for new people coming in here. Kind of like, hey. But again, I was saying that I'm skewed towards, long-term investing type of thing. Of course, buying shares whenever possible. And of course, this is my price target right here of what my strategy moving forward if MOAS doesn't happen yet, right? That price target that we're looking for up here. Now, anything below 50, I would buy at the same rate. So, whatever my, monthly rate is. And it's changed based on book value. And this is where I go from, or go my point of, assessment here. Of course, this is my own assessment on price, right? I go by book value. And $10 right now is book value, assuming that they are raising at $30, the second batch, and they're able to raise $2.2 billion, right? And so 5 times its book value, I feel like that's pretty fair. And why do I do 5 times? Because Best Buy is traded at 5 times its book value. So again, that's just my lame assessment on what valuation it should be based on book value. And so that's why I got $50 for as far as like the anything above $100, I'm not willing to add more. Not to say that I'm not I'm gonna sell the whole position at 100, but I'm not gonna add more in terms of because if it's 10 times book value, I just feel like it's a bit steep for me to kind of hold for a long term here, right? Of course, I'm always gonna wait for the price to drop in order to add some more for my long-term hold, right? Because again, like I have so many years in order to accumulate as much as I can, right? And so but also too, because of the price volatility, I don't want to be caught up in $80 and then it dropped back to 20, right? So again, until the price stability comes for this company, which I will, I truly believe that it will come to a point where the price will be so stable and you will have that hard floor to go by. And this is why I feel like the hard floor would be the book value of the company, right? So that is my assessment on things. But so let's look at the chart real quick. I know people would love to look at the price action and all that stuff. So this is the floor, right? The floor used to be $4 before they were raising that at the market offering, the $45 million, right? And then when they at the filing, we knew that they are able to raise the floor to $6.50. It's a little bit less than that, but I'm just doing a round off here, okay? So now that they're offering more shares, this is kind of unconfirmed because we have not heard any filings yet. So I'm just going to do a dotted line, but it depends on how much they're able to raise. The floor is going to raise up to that point. Again, this is book value, okay? If it trade 1-to-1, its book value, the GME is going to be, higher on that price. Not to say that, hey, in the future, the earnings of the company is going to increase that book value higher and higher and higher as time goes on, right? So currently, I'm just going to do $10 per share for now. Until I, could verify how much exactly, I will raise that. So, but anyway, there's a lot of people who cover a lot of technical analysis and all that stuff. I'm not an expert on this at all, but to me, this is a juicy. Anything under 50, like I said, is going to be a good buy for me. To avoid, timing it just right, buying calls, buying puts, buying all that stuff. Yes, you could play on it, but please be careful because the implied volatility is very high. So we could technically, hold on one second. Let me, oh shoot. Did I blow your eardrums out? I'm sorry. So I want to see the implied volatility for Gamestop real quick, because the 1 week that I saw, it was ridiculous. It was like, I should have this. On the 7th, June 7th, it was like really high. I don't know if this would show. But this is just an average of 20-day moving average, which is like 241 implied volatility. And so it's remained high, right? And that would give the percentile of 99%. So it's highly elevated. So what does that mean? It means that if you buy call option, it's going to be very expensive for you to even bid it up, beat it down, and all that stuff. And this is why people get wrecked, right? This is why people get wrecked, and then they blame it on the company itself. Like, it makes no sense to me that people don't really understand the risk. It's like you cannot just YOLO in. I mean, you think that Roaring Kitty just YOLO in the week before? No, I bet you anything he's been building that position, that call option, $20 call option that we saw years ago or months ago, or I mean 6 months ago, I bet, because again, this position doesn't just like boom, 3 weeks and then he has hundreds of millions of dollars like that. No, it's been built up onto that particular position size. I don't think he went like straight up, there you go, 200,000 call option in the money at $5, at $500 per contract here, right? So you have to be reasonable on that too. Not to say that you couldn't hit it big in 1 week here, but that would be gambling, right? So if you want to gamble, okay, sure, welcome to do so. But just be careful, and also don't say, GME is a scam, leadership is a scam, when leadership is trying to raise money for the company itself. And so just be aware of what you do, be aware of what you have. I disagree. If you think about, there's another factor involving the 5-time multiple. Okay, combined with the zero debt, and then combine that with the direct registration and okay, and investor total sentiment. Best Buy have over $4 billion in long term. Okay. Now, obviously, with the higher price come the risk of shorts fuel of bringing the price higher and higher over time, like a Tesla effect. Yeah, I mean, I agree with all of that. But again, as far as the business go, I understand, like, this is where, I'm very conservative in my prediction, right? Because I don't want to overhype myself either, or anyone who just joined in the first time in this aspect. Of course, all of this factor, it's just one factor here, right? One company that we could, the legacy business here, as Keith was saying. This is just straight up the most conservative price point that you could go for GME, right? At the current standing, right? Of course, if they announce merger and acquisition, this would change for me as well. So the valuation that I'm giving is just for the legacy business, so to speak. It doesn't account for anything else. And this is why I reserve my right to at least wait and see for all of these to come to fruition. And then that's why it's like a moon back for me. I'm going to hold this company for that duration. And if MOAS true indeed happens in that, price crazy telephone number, this amount of shares would be just fine for me. I don't need to be a billionaire, right? Like Keith, right? Anything that is more than I put in is a win for me already, right? But again, this is a long-term investment aspect of things, the growing pain. I don't know when this is going to happen. I just know that in 5, 6 years from now, I know that the company will grow slowly, or however fast it should grow. Now, there's a lot of speculation on how the company is going to grow their top line revenue and all that stuff. That's remain to be seen, right? People speculate that it's going to continue to decline forevermore until the end of time, right? But is that a possibility? I don't know. But I was kind of like playing around with this with this number before. I mean, let's just assume that they decline, their revenue until the end of time, right? Even then, it's like, yeah, maybe they are able to kind of bring in a lot. Now, this one is just accounted for 1 quarter. I use the fourth quarter for this number. This is actually a true number that you see on the balance sheets. And again, like usually when you try to project something, you kind of average out, right? Some quarters, some years they do a lot better than others. Some years they do a lot worse, right? So when you average it down for this particular percentage decline, right? You get, whatever, the most conservative one is 18. But you could obviously project any decline percentage to your liking, right? But people would love to well, I would like to use the worst number ever for the company to try to think, okay, the worst case scenario is they decline 18%, right? This coming year. Okay, so if that's occurs, how much money would they be able to bring in, right? So let's say revenue decline, income decline as well. I don't project that, obviously. But this one is just, I haven't done this side of, growth already. But if you look at, the previous, the 2023 right here and 24, fourth quarter, you see that there's an increase here, right? So the next one, I'm projecting it's gonna a lot more increase than that, right? I'm willing to say $80 million or $100 million fourth quarter, because they have a lot new ways to create more revenue, right? It remains to be seen because they just put in the tradable card and all that stuff. So that's going to come in quarter 4. Okay. I mean, sorry. Next earnings report, which is September something. Okay, let me try to see which one was I looking at here. I mean, it's worth noticing that the company itself is doing well. I hate it when the media out there is like, oh, this company doesn't make anything. This company doesn't work. It's not worth anything. Nobody's willing to cover this. No Wall Street analysts want to analyze this stock because you don't want to. Just because Wall Street don't cover it doesn't mean that it doesn't have any value. So that's what I'm here for, right? So let's see, who's this? Where are we going tomorrow? I have no idea. So I'm not here to give you a price point. Your guess is as better as my guess. It was a joke. A typical answer for every stream, I know. To remain in the uptrend, price needs to remain above 25. Okay, yes. I mean, that's a pretty good assessment there. But for me, I love to see the floor, right? The floor is 10. Obviously, I'm patting myself on the back here because I've been accumulating, down here. And so anything, to me, I mean, is it possible for this gap, right? This gap here to be filled too. So it's possible that the lower gap's going to be filled. There's 2 gaps, by the way. So, but with this momentum, I don't think it's going to be anytime soon. Maybe in the future. Who knows? But I mean, I feel like gap usually feel for this particular stock pretty well. So like I think every gap that is on the upside here already been filled. So maybe the next week to try to again drive that negative sentiment again. They'll bring the floor, the lower low, or try their best anyway, right? Who knows if this gamma ram is going to, take that ability away? They might let the stock price soar. Okay, thank goodness my check comes in a few hours late on. Okay, now I got some liquidity to throw into tomorrow. I suspect if we get back to 32 tomorrow, especially when we have earnings. Okay, earnings for Tuesday. Are we still gonna do earnings? I thought they already released it early, so the bad news has already been kind of dispersed. So I'm sure the markets is already priced in. Perhaps when did they release the? I think it's early in the morning. Yeah. So the bad news is already behind us, right? In my opinion. I hope Brian Cohen doesn't say anything, right? He just come in, mic drop, and then walk away. Just like Roaring Kitty, right? Okay, not really. Gaps on, okay, the 65 to 80 still remain to be filled. Okay, 65 to 80. Okay, so that was like after hours on Robinhood, so it might not be. Oh, okay. It might. True. So after hours Robinhood, it was like up here, way up here. So I thought this was the $80. My apologies. So the lower one, the lower tier one, it seems like it's being filled there. But yeah, I think we're closer to close this gap over here, down here, that's creating an opportunity for me to average down, obviously. Now, unfortunately, my paycheck doesn't come in until Wednesday. So we'll see. We'll see how that goes. Hopefully, it doesn't explode on Wednesday. Of course, I'm gonna snatch some more shares here for my long term. Like I said, $50 is my, just so that it's just a mindless thing. You just put in a couple shares here and there, anything. So to avoid like trying to time it just right. Again, the nature of like averaging costs down, it's a mindless thing to do. If you love the company, a direction, of course, that's going to be your go-to right there. The best case scenario is that you don't have to worry about the price fluctuation. But the worst case scenario is you might feel your order up here, at $80, and then the next thing you know is like $20. So again, the volatility is here. It's just again a matter of what do you want to do? Are you a long term? In my opinion, long term participant will win out a lot better, less stress and less. I know they would say, oh, back holders and all that stuff. Like that that's a gut punching term for you to be like, you're dumb to hold this stock. Okay. Thank you for saying that. Okay, so we feel share dilution. Okay, so we already diluted, right, Miguel? That I mean, I don't know. Again, like it would be me speculating on the like whether did they sell on Friday. There's nothing to confirm yet. I'm gonna wait to say that they are already diluting into the the run here. GME will be at over 40 at the end of this week. Oh, okay. That sounds optimistic. I hope so. At 40 would be lower than 50, so of course I'm happy. I will add more to my position. let's hope it stay under 50 for my sake. Okay, much more J, much more. Okay, all right. There's a lot of bullish sentiment over here. I appreciate the comments. Yes, if the stock look, you look on the stock exchange, the current amount of the shares is, but on Google it says okay. Got it. So the first dilution is already right, because they already filed that one, but the second one, that's what I'm speculating on the amount of money that they're gonna raise from the second dilution. At least, okay, this week. After the 21st century, you will soar over 100. Okay. The 21st century, why am I saying 21st? 21st. June 21st, I think that's what you referred to. All right, so let's get at my main point of coming on to the stream. Of course, I have a couple points to kind of bring in, but let me try to solidify some of the, the fact that the company has some business idea here. It's not just some pump and dump of some company that doesn't have any ways to go up from here. There's a path to profitability. There's a underlying business that is actually going to create, yes, earnings. I know people are projecting earnings for this company to be in the back. Like, 10 years ago they don't make any money. 3 years ago they lose $1 billion. How do you analyze a business based on what they did 5 years ago? It makes no sense, right? So as a business analyst or any stock analyst out there, why are you projecting for this company, for example? Why are you projecting it backward? You want it to look forward here, okay? So forward looking, obviously. So we have a lot of, oh shoot, did I not? Hold on, did I? Where my screenshot goes. Okay, actually, let me come back. Goodness. I was looking at Fintel. Fintel GME. Now the forecast for Fintel, which is what my my thumbnail is saying here. So of course the underlying business is creating a capitulation, just like Moran's was saying, arguing with that guy, whoever that guy is. Now on Fintel, this is the projection for the revenue. Look, the revenue is being projected that we're going to be able to increase in revenue in the year 2026. March, right? I feel like we could probably do that a little bit here, but we're setting up to increase in revenue by this much. And then projecting earnings. Okay, I think this is for the whole year. Quarterly earnings by March. This is what they say, quarterly earnings by March 2026. We're going to be able to come ahead at, hold on, 26 per share over here. So that's, again, a kind of rosy, something that any analyst wouldn't want to kind of cover, right? Or the news media doesn't want you to look at this one, right? But for some reason, the projected price is so low. What the hell? So the revenue is here to grow, we're about to grow the other way, right? Perhaps this is just, again, the estimated price by June. By June. Why are they not telling you the projected price by the same year? It's so comical to me. This is why it's so weird for these type of institution. And why are they not covering this stock? Well, the reason being is that, Ryan Cohen doesn't give them that guidance, so therefore we're not going to cover the stock. Okay, we don't need you to cover the stock, but at the very least, steer people the right way to where what to look for, right? Which is fine. I mean, come on, I guess this is the opportunity for me to kind of like present you a little bit here. Reiterate the data in front of you at the very least, right? And so, yes, if you know where to look for, you will find gems here that you might not be able to see elsewhere. But yeah, well, the projection is here. The growth is here. You just need to wait 2 more quarters to see it, or at least a year, according to Fintel here. As far as dividend speculation, any speculation about the dividends being paid, sure, we're going to have the ability to pay dividends. I mean, if Brian Cohen would just park it in the marketable security and just, instead of, keeping that in, oh, sorry, I'm so sorry, you guys. I just blow off your eardrum. But cash dividend is possible right now because the company is actually going to be positive, right? But I don't know if he's gonna announce dividend this year. But if he is to do that, he could have the ability to do that. I mean, 5% perhaps, 5% a year for this company. It's pretty doable at this point in time. Now, why dividends important? Well, dividend is important because, people are going to want to buy this stock to get dividend, right? Dividend paying stock is usually the stock that is sought after quite a bit. And then also it serves another thing too, that shorts, people who are borrowing shares and short into the market, usually they don't want to short anything that has dividend payment, right? Because again, not only that they have to pay the dividend or interest on the dividend, they have to pay cost to borrow in order to short the company. And so again, that's probably will force them to cover. If they're smart, of course, they're going to buy it before the dividend date of dividend announcement. But again, we've seen them over and over again, doubling down, and not even, not only that, they send people to make negative sentiment about the actual company itself, the actual leadership itself, and all that stuff. So understand the game that you play. Don't believe anything I say. Don't believe anything anyone say. Just go out and look for the data yourself, right? And I think that's usually the smarter things to do. Now, if you new to this, you might be so confused about what's going on. And this is why I only, for myself anyway, right? Look at the company based on the underlining, the company itself in terms of the finance of the company, right? And whether the speculation or oh my God, I can't even think about, goodness, I just went blank. What the media is telling you is true, right? Does it have any water at all? Does it hold water? And can we poke holes on those comment that the company doesn't make any money? The company is worthless, right? and that were dumb money in that sense, or that Keith Gill is just here to pump and dump. How can he pump and dump when he's showing your position that the stock went down, but his position is still intact? So it's ridiculous to say that one man is somehow manipulate the market in that sense, okay? Now, that's a good segue to go into what I'm going to cover next. Now, this is, 3 years ago when he, posed his, thesis on how he, come about. I'm sure most of you have seen this already, if you're in display. So let's see. Okay, let me go through the sorry, you guys. Earnings. The real shares dilution sold. Oh, okay. $4 billion in the bank. That would be awesome, right? Yeah. I mean, additional $4 billion in on top of the $2 billion that they have, or I'm kind of confused here. The suppression is obvious, and then yeah, of course they can't suppress it anymore, right? They can't say that the company doesn't worth anything. So now the next thing that the bear case would be, oh, Ryan Cohen doesn't tell us what he's doing with the money. It's like, really? Does he have to? Or does he even have to spend that money? Why are they so antsy to say, oh, just because this company doesn't have any the direction, because the leadership doesn't tell you anything? Okay, so if I invest based on the fact that I trust leadership to do good with that money, what is it to them that I can't make that assessment myself, that, hey, Ryan Cohen is not, some, dumb guy who doesn't know what he's doing, right? I trust that he has been successful before, so why not the second time? And if you're worried that I might lose money because I invest in this company, thank you, appreciate that, but okay. It's my money. Of course, I'm gonna try to invest in this company the best way I know how. But if you want me to buy into any other stock, like Nvidia, for example, okay, it's at an all-time high. Why do you want me to buy into that? And again, to me, that's suspicious at the very least. So the share borrower have to pay the dividends. Yes, of course. If that's the key cornerstone of paying the dividend. Of course, it's going to add the popularity on people who are dividend investing people. It's going to create new demand for that, right? And it's going to put the GME on the map as well, as like, hey, they're able to pay dividends. Of course, there can be a speculation on how they're going to be able to do that. Well, that's remained to be seen. Are they going to be consistent in giving those dividend every single quarter or every single year? Depends on when they're deciding to do it, if they're going to even go in that route, right? But that's not even it's not the only thing that they could do with the money. And of course, if they were to announce dividend in cash, I'm sure the media was like, oh, that's nothing, right? It's always something. It's always something about this company that the mainstream media doesn't want you to think about. Now, they always call file, right, or market manipulation when the price goes up. Sorry, for them, and then they complain when we call market manipulation down here. People would be like, oh, it's all crime, right? Oh, they always blame crime for this. But then on the other side, like, they're calling Keith to be in prison because he's quote unquote manipulate the market. How? He's posting meme, and apparently people thinks that he's dumb, right? He's the dumbest guy. He's an idiot. He's whatever. But for some reason, again, but let's kind of go back 3 years ago and look at his personality and see whether you agree whether this guy is dumb or stupid. So here we go. And mind you, this is before he's become famous, okay? I'm sure nobody was subscribed to his channel. Only a couple, maybe 1,000 people subscribed to his channel.
Reasons why.
So,
and the first is I'm not in the camp that thinks value's been underperforming. I actually think it's been tremendously successful over the past decade. So I just think it's funny when I see those headlines, is value dead? Is value dead? Is it coming back? And I try to think about why everyone thinks that. And the most obvious reason is just because we all lean on those oversimplified ETFs to measure the style's success. But I mean, that's not a good way to measure a bona fide value approach. It's and part of that is because value is so subjective. It's not so simple that you can just boil it down to a couple of metrics or something like that. So because it's so subjective, it's difficult to measure its success, and I think that's part of the disconnect there. And yeah. Second way I feel I'm different is I'm not building no discounted cash flow models during my stream, during my process. I'm a huge fan of Demonaran. Go check out his stuff if you want to learn more about valuation, but it's a waste of my time as part of my process. I'm not saying that's the case for anybody. I'm sure it serves a purpose for other people's needs, and there's other ways to invest besides my own. But for my style, it doesn't make any sense. Part of that is because value is just one factor. I mean, I'm a value guy, right? And that's where I started my development. And I understand the importance of value, but the issue is it's just one factor. And I used to think it was so important, primacy of value, right? And I'd weight it quite heavily. But the truth is, it just matters a lot less than many think. And so, usually the values I'll frequently be leaning on, and you'll see this during the stream, it only takes me a minute or two to calculate. And I think what matters, many people think that it matters like getting an accurate evaluation, right? But that's ridiculous. Like, no one cares. Who cares? No one cares if you can accurately value a stock, which is, I mean, you can't even get an accurate, precise value, right? That's ridiculous. But even if you could, even if you somehow successfully, perfectly measured a stock, the value of a stock, the market doesn't give a shit. No one cares, right? What matters is incorporating those values into a framework that you can leverage over time to profit, to outperform the market. I mean, that's what matters. So unless you have it's the framework that matters. And within that framework, value is but one factor, right? There's other things that matter too. And so for that reason, I find it's beneficial. Don't waste so much time valuing one particular stock. Just get a general idea as to what that valuation is and do it for as many stocks as you can and as consistently as possible. And then you can tap those and incorporate it more easily, in my opinion. You'll see this. I'm rambling now, but you'll see it during the stream and some other videos and stuff. All right, a third way I'm different. I use technical analysis. Ooh, right? I mean, now even the value folks are shaking their heads at me. But I don't know what to say. The charts do a good job of illustrating the trends, prevailing sentiment, and even the fundamental events that are unfolding, which is frustrating as a fundamentals-focused value investor because I've invested in stock in the past, and then after the fact, I'll look back on the chart. I'm just thinking, damn, all that fundamental research I did, I could have just been tracking the chart. And not always, right? It's not perfect, but the technical analysts know this, but it's a good enough shortcut that it should be used. Now, by the same token, right? You have many value folks who are criticizing charts, saying they're following and everything. And the technical analysts, they do the same thing. They think the fundamentals folks that they're all crazy for looking at that stuff. And the truth is, I think both sides have a point. And so that's why I'm always I think it's beneficial to use both. That's part of my edge. I feel I'm kind of surprised more people don't. But yeah, you'll see you'll see more in the stream. So yeah, that's kind of how I'm different as a value investor. But there's some additional things that would really be useful for you to know about my approach before you check out the stream. And the first one is that I currently shoot for 50 to 100% annualized returns, which is aggressive, right? And it's so aggressive that I bet that my style, it would not be suitable for many people who might be tuning into the stream. So just a reminder, the live stream and this channel is educational in nature. I just wanted you to see how a legitimate process might look, so you can maybe glean some aspects for yourself, but don't think the way I'm approaching the market and even the stocks I'm investing in would be appropriate for you. I'm always going to say that just to remind you, but it's really important to understand that. But anyway, 50 to 100%, and it's important, like when you're striving for returns like that, at least as an individual investor, it's not, you're not getting that every year, right? It's lumpy returns. There may be years where I don't get to 50%, but there's going to be windfall years. And every once in a while, you start to like, is that windfall year going to come? Or those years going to come? But they inevitably do. And I think that speaks to the aspect of value and why part of the reason I think it's going to persist. I mean, it's grounded in human biases, which in turn is grounded in our evolution. I think that's going to sustain for a bit. I know algorithms and robots and stuff. You got to keep an open mind about this, and I'm biased. But anyway, sorry.
Yeah, I mean, okay, so let me jump in real quick. Sorry. I mean, if you're listening to this guy like for the first time in your whole life, right? You would like, this guy is not dumb. Okay. Like, of course, he's using every aspect of thing, and of course, I'm trying to replicate that. I'm not as smart as he is, in terms of analysis and all that stuff. But what he's tapped into here, number one, obviously, he mentioned about don't focus on one stock. Of course, like I think the reason why now he only focus on one stock is because that's a maximized amount of, bang for his buck, I guess, So when he said about how he was combining all of these, analysis on one stock, and this is what he's by showing his portfolio, you understand that he used all of these just on one stock, which is GameStop, right? The only one. He used technical analysis, also value. So that's why he has, shares of this company. Number two, he has option. And I'm sure he added to a volatility aspect of it as well. As a technical analysis, people that look at chart, okay, moving average and all that stuff, fear and greed index, whatever, he knew exactly when to strike. And this is why it's such an important point to take. Like, that's why he's able to amass so much shares and call option at the same time. And again, he knew when to strike. Like he said, he's not always right, but he has inclination to say, hey, this is the bullish, right? He's like, any technical analysis people who knows anything about, the fear and greed index or whatever, or watching the social sentiments on about this company. And on top of that, you add the, negative press about this company. Anytime you have negative sentiment so strong that it's unfounded, like in this particular case right here, I like to point out that the company posts a positive earning for the first time, but yet you see the steep drop in order to, scare you out of your position. And anyone who have studied like him, studied this stock so well on the value of this company, would say, hey, this is bogus, right? Yes, they could drive it down as much as they can. People probably was selling here, well, quote unquote people, was panicking selling here. And they're wrong. They are wrong about this company. And of course, he's probably trying to, would have said, okay, it might have been a W over here, right? Technical analysis. And he's probably been building the position of that $20 call option right here, right here in June, right? Since May or April. When April comes, he was like, okay, all right, they dropped down to 10. Let me add more position to my $20 call here, for whatever money he had, So it's really easy to understand how he would be able to, get that massive position. But mind you, too, evident on his portfolio, his cost average is $21 a share. So it's very, I'm speculating here, okay? He's been probably dollar cost averaging down, as he goes here. Whether he's selling covered call, I don't know. That would be a speculation. You don't see that on his portfolio currently, but it's good to assume that he might sold some covered call like out of date, up here, to generate that. I don't know. Again, me assuming things here, right? Only speculating because I don't know the guys personally. But my point is that, he understands this stock more than just one dimension, right? Deep value investing, shares, and technical analysis. And so he's probably now a option volatile OPEX predator type thing, right? Understand the OPEX cycle and all that stuff and hone on that and concentrating on one position and one company. And so, yeah, a lot of layers to this company that you need to understand in order to play the game well, right? And yes, of course, make no mistake about it. It's all a game here. But the skewed is to the upside now because, in my opinion, the company is valuing at a higher price now. According to Keith, the reason why he's buying $20, he thinks it's undervalued, right? At $20, right? He thinks that the value is multiple times more than that. Now, in my opinion, I don't know if I mentioned this. I'm gonna mention it again. I think the reason why he's so nonchalant about his position currently, I think he's like looping his live stream. Let's see. I think he's on live quite a bit. He was looping this live stream right here.
The foundation of it is
the reason why he's not like antsy about like losing $300 million right there, down 300 million again on paper, right, is because even if it's coming down, to like, let's say his call falling down to under 20 by June 21, he would still have 5 million shares of GME. That 5 million shares, it's going to be $1 billion, worth billions of dollars in 5-6 years from now, right? Long term. And he's going to be holding that shares for the long term till the end of time, I bet, right? And so he's not worried that, okay, I'm going to lose what was the original money that he spent to buy all these calls, $60 million or something like that. But even if he lose every call option right there, he would still be fine. He would still have 5 million shares. And so it's just a bet that he's betting like, hey, within this month it's going to go crazy. That's what happened. So all right, let me go through. Keith would never openly come back unless he thought that this was the deep value investing opportunity and that it isn't going to go higher from here forward. Yeah, I mean, again, highly speculative, right? I have to say that, of course, like I would love the price. I'm kind of selfish because I want the price to be lower so that I could get it at 20. But it's just my own speculation here. Because hey, if it's down to 18, I get more shares of this company at a lower price. Will it? Well, Keith thinks that it might not, but anything could happen, right? They could possibly remove the buy button again. Who knows? Do whatever they need to do. There is no indication for a dividend. There is a history of dilution. Okay, I guess somebody's sour. GME has approved to dilute hundreds of millions of shares every time I buy. I know I am competing against, okay, if that's how you feel. Now, if you're a shareholder, you realize that your book value has increased, right? And so true shareholder have been increasing. And mind you, too, Brian Cohen also diluting himself. He's not immune from the dilution. I mean, he used to own 12%. The first offering dropped him his percent ownership down 2%. So this one, it's going to drop him even further, right? So instead of 10%, now it's 9% or 8%, 6%, whatever, right? So technically, if leadership is coming out and say, hey, we're buying more shares. If Brian Cohen's like, okay, I'm doubling down. I have $3 billion. Let me put more money into the company. I mean, if that's the case, I mean, what do you think's going to happen? So again, I am happy as a shareholder myself. I get a, book value increase in my position here. And so you could always add more. I mean, if you think that GME is okay to be bought at $40, you bought it at 40, right? Then you should be elated at this point in time, right? At this point in time, right here. You bought at 40. You think it's good enough to buy at 40. And apparently you said you sold at 50. Okay. All right. So now you have more money to put at this one. You might have the ability to buy it at $25, in the near future. So if you're a true believer in this company, you would add more at this point. Now, if you want to short it, you think that dilution is going to affect the company's price action, then short it. You might make some money on it. Be my guest. But just know that when you short, you're gonna send the price down, lower, for more people who believe in the fundamental of the company, and people who are sought the right information to know exactly what this company is actually worth, right? Even Fintel cannot deny that eventually they're gonna, project a revenue increase of hundreds of percentage here. Can they beat that? Can they bring that? That's remain to be seen too, right? Who knows in the future? You can't say that, oh, they're gonna decrease forevermore until the end of time, right? Because otherwise we would have been bankrupt 3 years ago. Okay. And so the fact that they're not bankrupt, not only that, they have cash, not only that, they're profitable, right? Based on this particular earnings that came out already, we could confirm that this trailing 12 would be $24 million in the plus. So what is there to complain about? So instead of $6 million, remember 3 months ago when they post this, people were like, oh, we have to wait 1 more year before GameStop's gonna make $6 million. Big deal. Loop-de-doo, right? No, we didn't have to wait 1 year for that to happen. We only have to wait 1 quarter or even more. So now you're gonna see 24 point something million dollars on this trailing 12 here. So that's like what? How many multiples? Yeah, a lot multiples, yes. And this is going to change. Obviously, yes, it's highly elevated, but we're addressing that as we are going. The capitulation is here. The capitulation is here. So maybe they need to close a few more stores and then expand in the right place, the right footprint here. We want to kind of capture more areas, covering more areas, rather than concentrating in one, city with 10 different stores. Now you have 2 stores in big city, and then another big city's gonna have 2 stores each. Who knows? Again, I'm just speculating here. Okay. But yeah, I mean, you should be happy, in my opinion. But if you're shorter yourself, Manuel, you might not be happy. Well, I know you were a shareholder temporarily, because you're just I don't know. Again, this is why traders lose money sometimes, because they don't, have the patience to let the company do its thing. Okay, he should have talked like during the the last live stream. It was a clown show. I couldn't stop. Of course, this is his personality. You're talking about Ron Kitty. This is his personality. Like, I mean, I was laughing the whole time, you know. Of course, the news media the news media makes me laugh even more when they cover Roy and Kitty. It's like, oh, look, judge for himself, judge for yourself. Look, it's so unprofessional. I'm like, what do you expect? It's like him coming suit and tie, and no, of course not. His personality shined through here, and he's genuine in that sense. He's genuinely surprised, No, I don't think he's like surprised or anything, but maybe he's playing the part. Who knows? Who knows? What do you think about AMC? AMC is not a good investment. Yes, if you want to trade it, you can, but it's not a good investment. So it's not the same as a GME, as people are telling you. I used to be in AMC as well, but I get out before APES was issued, because I understand that the leadership is not aligned with shareholder whatsoever. He might say in public that he's aligned with shareholder, but he didn't. I'm talking about not Ryan Cohn, Adam Aaron. Okay, so the action that he's doing is not matching with what he's saying in public. In reverse, Ryan Cohen doesn't say anything. He just show you his number here, right? If you like the balance sheets, if you see if you think that this company is going to do well in terms of numbers and the direction of the company, leadership, then go ahead. Be my guest, right? He's doing at the market share offering, right? He's not going to the backdoor dealing like Adam Aaron. So if you're in AMC, yeah, you could make money, but it's not a good investment for me, right? For me, GME is a long-term hold, and it's have better value than AMC. Okay. That's my opinion. Just so you know too, I don't have any position long or short on AMC currently. Of course, I reserve the right to buy a few calls or a few puts on AMC as well. So depends on what the market is doing, but yeah, don't compare the two. I know people love to compare the two because that's what the media want you to do, and that's the psyop, right? Understand that. So thanks. I hope I bought my share at high 50s. Okay. Scam popcorn, Adam Aaron, fake silverback snake. Yep. I am ready to buy when Portnoy sells. Okay. He's a good indicator. I don't know this guy. Sometimes, like, I don't know. He's good for interaction, obviously, right? It's for putting GME as a discussion point, but of course he's ebbs and flow traders. He's not really here for the long haul here. So just a part of markets, right? When you see the price going up like crazy, you think that you might make billions of dollars just doing the same thing like Ron Kitty. You can't do that. You have to build it slowly, I know, but I do care about you holding to provide support and buy to provide exit. Okay, I mean, I get it. You think that this company is somehow I truly believe in the leadership, and I don't mind it. Like, again, this is the nature of the stock market, right? In my opinion, just like you said, it's a zero-sum game. So whoever think that the company is going to succeed is going to buy in no matter what, right? Whoever thinks that the company is going to fail, they might short that shares to you, who thinks that, hey, it's not worth $20 a share. It's not worth whatever, look at the analysts out there right here. At the face of this price projection or revenue increase next year, they still give the price target today at this price point right here. And we all know why they do this. And really, at the book value of now $10, now I'm willing to give the benefit of the doubt that this is not updated until the share offerings and how much they're going to raise. So if based on my speculation, it's $10 a share. So how can you say that about a company that has $10 a share and you give a price target of $6? You know, and so, and even let's say not taking account the $70 million being diluted here, I'm willing to give the benefit of the doubt that this is the price target after the first offering. Then this is 1-to-1 book value, right? So you're saying that I could buy this company $1 for $1, not accounting for the leadership, not taking money, social sentiment, the fact that they don't have any debt, no discount cash flow, like Keith was saying. Discount cash flow model is based on debt, right? And so if the company has no debt, it's actually the other direction. Your money is actually going to multiply the other way instead of losing the other way, right? So understand that. And that's why he was saying, like, discounted cash flow, that model, you shouldn't be using one metric to measure any company at all, right? And so it's telling to me that they only focus on the top line revenue, right? Top line revenue, without looking at, cost of revenue decrease dramatically, dramatically, I mean, in my opinion, right? And also, growth profit, if you look at, yes, it's declined, but is that much of a decline? It's declined slower than the actual revenue itself, but also net income goes up, right? And so that matters. Those other metric matters so much, okay? Now, this hasn't been updated yet. I'm sure it's still developed in that sense. So these numbers might not be accurate at the moment. Understand that as well. Now, this is the what Moran's always saying, or kind of point out here. It's important, right? When you have more asset than its liability, your company has the ability to have much more breathing room than any other company that they're pushing in front of you. Okay, so if you're new to this, obviously make sure don't say, or if you think that GME is a meme stock, pump and dump and all that stuff, you might be missing out on the actual fundamental of things here. That's what Keith is trying to tell you. It's like there's more to this than just one thing, right? And he's showing you your position right here. I mean, 21 is his cost base. So I'm so glad that I got at 10, right? $10. So technically, I beat his cost average over here. No, I'm kidding. My cost average is like $30 or something. Probably a lot more, less, maybe 38 or so, if I have to calculate it, kind of based on my head. Like I said, I have so many accounts out there that of course I'm going to plan to add more as I go. My strategy, I already, kind of tell some of you already in the beginning. And so, yeah, I'm just going to go by this metric until I, feel like, okay, this is a valuation that it's overvalued. Of course, I'm going to sell. I mean, I'm planning, a whole bunch of different strategy here. So be careful. I mean, know what you hold, and know what you're getting yourself into. If you buy call option, hoping that, you're going to hit it big, good luck. I'm telling you about the implied volatility. It's going to be so high. So option buyer is going to have to pay more to bet it up or down. Understand that, and understand what an IV crush is. Google that term, IV crush, and you will understand, okay, what does she mean about IV crush? I'm not well enough to kind of explain to you what it means. I think there's many other video out there that you want to look at. Okay, we don't care of any people like either. Okay. All right, people is fighting. Let's not fight. This company will be making at least $400 to $600 million bottom line net, and will and have over $1 plus EPS for the full year of 2025, and will announce dividend by then. Okay. Is that a projection? Is that a prediction or inside information over here, Jay? Are you an insider? I hesitate to kind of pronounce that, if you're insider, wink wink. No, I mean, I think my prediction is a little bit more conservative than you, or my expectation for this company. Of course, I could be wrong, but I'm happy with 300 million to 4. But if we could achieve it this full fiscal year, it would be the bomb, right? The bomb. S&P 500 indication will be in 6 months from now. Okay. See, I said 2 years, but 6 months is good too. It's always amazing. How do you feel about call dated out to August? I don't give financial advice. Keith has shown you his position already. If you want to copy that, that's on you. But for me personally, I did buy in the money call for 20, strike price 20. At the time, it was traded at, I don't remember. I started like 2 weeks ago. I have to look at my account, but I did the in the money call. But let's look at the call option here real quick. That's actually a good segue for me to go into here. Where's your $5 GME manual? I know, right? Single digit. Oh, you better wait for the single digit. Of course, see, that's again the psychology of people, right? When you see the downtrend and you're not dollar cost averaging down, you tend to feel those emotions like, oh, it's gonna drop down. But then when it goes up, everybody wants GME at like 35. Oh, 40. Oh. It's like jumpy, right, to say the least. And then they wonder why it's pump and dump, right? they see the price action and then they just can't stop themselves from buying. Again, train yourself to be the opposite, right? The opposite of the herd. That's the name of the game. Is if you could detect that early trend right here. And it's not always right? I mean, come on. Like, nobody could predict the right strike here. There's only a possibility of it the possibility of it bounce off of this. Now, traditionally, right, if you test this trend line so many times, usually that level is weakened and it usually drop down a lot lower. But due to the fundamental of the company doing well and all that stuff, they can't justify lowering GME price to single digit anymore. And that's why they capitulate to the other side. Because think about how many people would buy more of this company if GME is at $5, right? So they can't justify that anymore. And so they send the price up through the option chain, as we saw here. So let's look at the option chain here. Now, I did buy, hold on, let me see which contract did I buy. Again, I only do 2 or 3 contract here, just a small risk. Now I'm trying a poor man covered call strategy, okay? So I bought the in the money call, and I paid $600 on one contract, and $745 on one. So I have two on that one. So I average costs on my contract. And August 26th, I think, 16. Let me verify that. Okay, so I bought in May, and I bought this contract right here, October 26th. So mine is in the money right now. But so this contract is appreciating in price. I mean, you know, again, this is a risky thing to do too, because you never know if the price drop down the other end, that contract will you know, render less, okay, less in value. So right here. So the cost right now, oh wow, really? I think this price point is, I think Robinhood give me less value for this one. Oh wow, really? Okay. Oh, this is a break even now? Hold on. Price. Huh. That's interesting, you guys. Interesting. Have to do more research on that. But anyway, so let me look at the most busiest chain over here. Of course, we still have 200,000 contract in the money right now compared to the put in the money. There's very, very, you know, steep gamma ram, obviously, right? If Keith were to exercise this one, you would see a spike here. Of course, the market maker would have to go to the market to buy, you know, whatever amount of shares that is in there. But let's look at the put over here. Of course, I'm sure they're going to try to bring it down that week. Right there, you see 40,000 contract, but I don't know if that's going to be possible, because if people keep buying in the money call and exercising it, until then, you have one more week to go in order for that to happen. So max pain right now is 29, close to 30. Will the market maker bring it down here so that these put people will be in the money, right? How can they do that? They would be losing money, you know, in order to bring that price down to that point. So look at the contracts over here, right? Drive it down. I mean, the only way that they could get out of this is to scared call people to sell. Okay, sell their in the money call option. And it's going to be rolling as the trading week going to happen. So I'm going to monitor that as well. So to battle these massive amount, they might drive the price down, right? So how low can it go? Like I said, I was like looking at, wait, this one is the 14th. So the support could possibly be, the largest contract is right here. And I don't know if they're gonna be able to bring it down here. Only 4,000 contract over here. And the resistance would be, for this week anyway, 30. Okay. Now, that's not always correct. Okay. Because again, max pain is way up. Right here. Max pain means that it's deliver the most pain to retail. and market maker usually would bring that price to the snap at that point. So yeah, it's going to go up. But again, it's a matter of how many people will be shaking out of their call position, and whether they have the money to exercise or not will determine the direction for next week. Yeah, 30 for that week, next week, and then max pain for this big option chain is 20 still. So that's going to be a problem, right? So we'll see how it goes. I'm expecting a upside here. Option price will, when the market is closed, are unavailable. Oh, okay, got it. I see. I jumped the gun, I guess. Got it. Thank you. Appreciate that knowledge. I did not know. I thought it would be like live update or something. Okay. So now let me look at, now I was looking at the kind of comparison to the option chain for NVIDIA, and I see something like it's kind of suspicious in my opinion, obviously, based on this data coming in on the option chain right here. Now June 21st is a very, very particular day, for NVIDIA. Now max pain for NVIDIA for that week, look how low it is, right? Very low. So for market maker to make any money, or on the option chain, okay, not the share price here, they would, so market maker is forced to buy into this, right? Because of the massive amount of call option in NVIDIA. Now, mind you, look at this. Per contract is very high. For anyone to make money on this, it has to be institution, right? So my suspect, it's suspicion to me that how is this going to drive the price up so much? Retail is not moving this. We don't have enough money to move this. Look at this, right? Hold on. Sorry. 300,000, even higher than GME. So my speculation on that is that, who has been pumping NVIDIA like in the past few months, right? CNBC, right? The same right here, CNBC. They want you to buy NVIDIA and they want you to sell GME, right? And so it's a brainless analysis that I have. I think that they want to pump GME and to say, hey, would you rather? No, sorry. They want to pump NVIDIA against GME to say to the public, would you rather own the most valuable company, $3 trillion at that, and it's going to go higher because stock split and all that stuff. That's what they're saying. Or this company right here. Now, of course, we all know why they do this, right? Because that's what they're trying to be, the exit liquidity, as Manuel was saying. It's like exit liquidity for the people that are, pushing this price up. And I think it's institution, in my opinion, right? Of course, this is my speculation, because due to the fact that nobody in their right mind would buy has $5,000 to bet on the direction of NVIDIA over here. Okay, it's just too much for retail to play this particular option. So the conclusion for me is that there might be some relation over here. For this particular week, let's see. See, a lot more contract is in the money now. So somebody's pushing this for a gamma RAM for NVIDIA, and it's going to end very badly. And people who believe in the mainstream media kind of like point of view over here will get hurt. Because they're buying at the top. They're buying NVIDIA at the top, and my prediction is that GME is at the bottom. Right? So it's your choice. If you want to buy into it, that's just you. If you think it's a terrible company to own, then okay, on you as well. On you. Everything is not financial advice, obviously. It's all speculation. I'm all speculating about the valuation of this company, right? We all have an opinion here to chip in, but and develop a strategy. I mean, look at Keith. He's here. He's here for every aspect of the of this stock. Not only he own share, he own call option. I'm sure he is a technical analysis person as well. So he used those three knowledge in order to maximize his gain. Just like he said, he's shooting for 15 a year, right? It's very high in my, in traditional sense, but he's a high risk kind of guy. And he said, like, hey, it's not for everybody. So, make your own analysis on things. And if you believe him, or trust in him, his analysis, then go ahead. But I would much rather trust my own analysis, right, on the company. And so you have your own thesis on the company, whether it's still valuable or overvalue or whatever. Bet whichever direction that you feel about the company. None of that would change the leadership, right? Leadership will still be in this company for whatever duration that, Brian Cohen is here for. And he said it in the first letter to his employee and shareholder, like buckle up, right? Buckle in or whatever. He's here for the long term, ride or die type thing. He's here for the long haul, in my opinion anyway. So you could read it as you wish. You could believe him as you wish. But I think, leadership has been demonstrating to me that, he's a good steward of the shareholder equity at the very least. And yes, the fact that he buy his own shares and not getting pay on this, it's a testament to, at least for this last 3 years, the company hasn't made any money, right? And so it's remained to be seen whether he's going to take a salary or not later on. And if he does, I wouldn't mind either, because again, the company's going to make what? Based on Jay over here, he thinks it's going to be $400 million a year. I think it's 3. 3 is conservative, but we could be more optimistic as well on the other side. So let me end with this one. I know I'm kind of babbling on. I'm kind of like, my voice is going down as well. So, but let me end with this one. Now, this gentleman hit it at head on. I know people are calling for Keith to go to prison. Of course, like, it's so stupid. Like, there's just market manipulation and all that stuff. It's like, really? Like, chill, right? So there's more bigger fish to fry, so to speak. So let's listen to his comment over here. And I agree with him, right? But let's listen in.
Trading has been halted for the 7th time since Roaring Kitty has been back and the GameStop saga has reignited. Now, this is pretty unprecedented, but let me explain to you why this is shocking to me. When you understand that there is high-frequency trading being done between servers that have federally regulated lengths of fiber optic cables in order for these hedge funds to make hundredths of a cent more on each trade than the average American person working with AI. That's before we ever get to some of the greasing of the palms when it comes to the legislative bodies and participants in that. We're looking at you, Nancy Pelosi, Dan Crenshaw, and lots of others. There's no way you make $200,000 a year and have a $27 million net worth and came from nothing. It's not possible in public service, theoretically. So the fact that we now are just openly halting trading when the trading doesn't go as we want is a little like the blackjack dealer being like, oof, really don't like the fact that you just picked up a couple of, kings on that. I guess redeal, guys. Sorry. And so they just stopped the trading. When in actuality, what this is a hedge fund that is very badly losing a bet and it's not going well. So I'm just curious, at what point do we just admit that this is all just being massively manipulated? Do we just continue going about it? It's interesting to be participating, living, working in a system that is openly being ran by an oligarchy. Roaring Kitty, you should be a billionaire by all rights. It's not their fault. You are doing, as far as I can tell, I have some compliance license. Nothing illegal is happening here. I'm not really sure what the argument is on the legal side. Also, Robinhood is a crap platform, and Vlad should be imprisoned for, or at least he's complicit in this. Like, it's absolutely criminal what's happening with GameStop. Again, it's happened before.
Yeah, it's happened before, and they're still going on, right? And you have people out there who are trying to get this guy, this unprofessional, right? Dumb money to go to prison for what? Like, what? Next full year. Oh, okay, like fiscal year, right? You mean 2026. Am I correct? Yeah, so I mean, I agree with this gentleman. Obviously, he put it more elegant than I could ever articulate those type of thoughts. But look at this. Okay, hold on. Let me see.
But I seen those headlines. E-Trade. I see those headlines. I gotta check. I'm checking in every day. I'll log in. I'm like, are my positions still there? Are they still there? Let me check. They're still there. Wait, they're still there. Okay, they're still there. I wasn't even like paying attention to the details. They're still there. But each morning I'm like, I don't know what's happening. So I go, all right, well, don't make me, but E-Trade, I'll do this with HTML. I'll do that. Don't make me remove it. I know how to do that. I'm just kidding. No, I'm gonna put it back. We're good. Those positions are there.
Like, yeah, he has the card
I'll do
here.
it. I'll remove it. Don't make me.
And actually, E-Trade kind of like violating a privacy
I'll delete that from the HTML.
code too to expose him to be on E-Trade.
I seen those headlines. E-Trade.
Yeah. So again, like time and time again, they show their cards to, like, why are they so? It's like, as a trading platform, you would want to invite people to trade on your platform. You wouldn't be, pulling your hair out because somebody, bet, some way. Now, the only way that you would feel slight, I guess pain is because you might not have that shares. You might have, again, speculation. You might sell those call naked and you don't even have the actual share to do it. Hey, again, I'm just speculating. I don't know what's gonna happen, but that's just my mistake, people. But anyway, so I just ended. Oh my God, Lynn, I'm so sorry. You always like the worst time, right? The worst joining time over here. Okay, KR live stream have a lot of. Oh, okay. I don't know. Again, like I'm not into kind of like solve everything or the bandage. I saw some people on X try to try to analyze what the band-aid mean and all that stuff. So which one in particular can you share one for me, Lynn? Before I go, it would be fun to know what those Easter eggs would be. Um, so let's see, pressure and time. Okay. Yeah, so see, this is the similarity of the last squeeze over here. Just be aware. I mean, just because it happened before, it doesn't mean that it's going to happen again, right? Understand that it's always a risk to kind of compare the past to today. Of course, people think that this time is different because it's all, short already covered. That's what the other sentiment as well. So understand that you might, again, if you want to get rich quick, buy and call option, understand the risk, please. That's all I'm asking. Bum, bum, bum. Okay, 460, 400 and $600 million profit on bottom line net for the whole year next. Okay, whole year next, 2025. Got it. Profitability for the second year in the row. Okay. S&P 500 in the introduction soon. Okay, and dividend by the end of the next year. Okay, sounds good. I like that, how that sounds. So my speculation is 2 years. Would that be by the end of next year? So yeah, 2 years. That's my thought as well. It might take some time for them to approve as well, right? Because Tesla, they actually delay Tesla being in the S&P 500 for a long time, even though they hit all the criteria, right? So I'm factoring that as well. So I'm giving it 2 years. Check his thumbnail, look at the bottom light. Thumbnail, bottom light. Oh, Bitcoin thing? Is that thumbnail, bottom light, right? For the live stream? Okay, let's see. I'm curious to see. Bottom corner. Huh? I'm confused, Lynn. The benda of, I have no idea what you're talking about, Lindsay. I'm not so in tune in all the Easter egg here. So I'm not going to even attempt to even explain to people over here. What? I am so confused right now, Lynn. See, I don't know all of the cultural, like the movie. Is that from the movie or something? Look closer. Right there? Okay. I mean, I believe you if that's the case. But what does that mean, though? What does that mean? Revenge? I have no idea. Bullish popcorn. Okay. All right, guys. I will allow Lynn to kind of like explain what it is, and then I'm gonna go soon. So, but let me wait on that one while Lynn is kind of typing up his description of what that means. Let's listen to this one. Now I know inflation. You when you hear about inflation, inflation is only 2%. A year is doesn't mean much. Now it adds up. Let's listen in, and this is why I think the consumer base is very crushed, and we're being lied to, right? The inflation is not just 2%. Yes, 2% of rate change year on year, but that add up over 4 years.
The cost of living crisis. Suddenly we went up from prices being around there to prices being there. And you don't really see that in this data, okay? Because inflation is really just measuring the difference between that and that. And if you look at those two lines, you're talking about a 2.3% change. That's the number we're talking about today. But for a lot of people, it's not about that. It's about the difference between this and that. And when you look at the difference between this and that, that's 20%. And I think that's the dichotomy here between these inflation numbers where it looks normal and this, which is really not normal at all. That's the cost of living crisis. Suddenly we went up from prices being around there to prices being there. And you don't really see that in this data, okay? Because inflation is really just measuring the difference between that and that. And if you look at those two lines, you're talking about a 2.3% change. That's the number we're talking about today. But for a lot of people, it's not about that. It's about the difference between this and that. And when you look at the difference between this and that, that's 20%. And I think that's
Yeah, so that is why consumers are crushed. Since we're in the consumer discretionary spending, we're the last one to be considered whenever people have extra money to spend, right? And so that's why the revenue's down. You know, it's based on the economy. And of course, the news would love you to think that it's only booming. And that's the misperception there. So, GameStop does pretty well, you know, in the face of a economic calamity over here, right? Of course, the worst is not here yet. The market hasn't crashed yet, so you know, it's remained to be seen. But it's due for one. It's due for a correction, and I'm sure this $4 billion or prospect of hopefully more than $4 billion in cash is going to help, you know, buy up every single thing, every, you know, high valued stock, so to speak, in the crash, in the correction, right? But currently, you know, there's nothing to be feared here at all in terms of the fundamental of the company. Now, the price is going to do what the price does. Again, you know, if you want to jump in and participate in the craze, you can, but understand the risk, like I said. Okay, let me read. Yes, we have the movie V for Vendetta. Okay. And the one where the anonymous masks are famous for revolution. Okay, okay. It's him starting the... it's going to be a domino effects once one hedge fund covers. Okay, domino effects. All right, so that refers to people who have been shorting this company, right? Who have the ability to short this company. And when one hedge fund closes, the next one has to be forced to close, because then they would have to buy the price at a higher price, right? At all costs. And so that's why the MOAS is being touted here. Of course, I don't know. I don't know if that's going to happen. And when it happens, will it have the same effects as we all expected here? Of course, all of this is speculation, right? So please don't trade based on this at all. There's a Reddit post by some user that have a good write-up on, okay, stream. Again, you know, I don't trust Reddit in that sense, because it could be infiltrated, right? To tell you, oh, the date is this, or this is going to be it, and to allow people, or to at least cause that FOMO effect, right? And so that's why I'm not into that camp. I'm more into the camp of, okay, if it's going to squeeze, it's going to squeeze. No date, no, oh, it's going to be this week or else it's not going to be happening, right? So just be careful, you know, believing all of those stuff. Make sure to not YOLO and call option. Now, there was one gentleman, I don't know if I have it up, but he's usually very bullish. I think he was like buying a June 7th short-dated call, $20,000 of his money went in, and then he was like, oh, I lose everything in GME. I'm like, duh, you should have bought stock with that $20,000. Like, I mean, $20,000 would have given him you know, what, at least 700 shares of GME in one go. But he didn't want to do that. He wanted to buy call option instead. Okay. And then when he lost, he was like, oh, this is not what you think it is. I'm like, okay. So I need to look for that video though. Of course, not financial advice, but I'm buying some tomorrow. Okay. Yes, but hey, you know my stand on this thing. Of course, I have my strategy. Have your own strategy, and be careful. You know, the market's open tomorrow. We'll see. Okay. I'll see you when I see you.